All right, so you got about, 12, 15, 17 hours to get your return in here, or you are late, and you got to get an extension out there. Ryan Ellis is a D.C. area tax preparer. He's also one of the leading tax experts in America and has worked with Americans for Tax Reform on federal tax policy. Now, Ryan Ellis, I know that you would like to pretty much scrap the IRS, but in the meantime, we got to live with this necessary evil. Is there anything that people can do right now, quickly, just last-minute stuff that they may not have thought about to alleviate the tax burden, some of those things that are off the beaten path?
Well, the first thing I would say is that if someone hasn't really gotten around to getting their taxes prepared yet, then they're definitely going to want to file an extension. That's one of the easiest ways to avoid paying extra money to the IRS, because they have what's called a failure to file penalty. If you don't file an extension by April 15th, then they can tack on, all sorts of penalties and interest on top of whatever any potential balance due you might have. The easiest way to avoid that is just to do an extension, which you can do through TurboTax, you can do through your preparer, you can do almost online by getting a Form 4868 from the IRS if you really need to. And that gives you an automatic 6-month extension. So that's an easy way not to give money to the IRS.
On that topic, you often hear a lot of groups advertising about how, they can negotiate. If you owe a bunch of back taxes, they can negotiate with the IRS and alleviate that burden and alleviate penalties. Is that for real? Do you need a group to do that, or if you go to the IRS and say, "Listen,"
are you asking for a friend?
Exactly, asking for no. If you go to the IRS and say, "Listen, I've got a problem, and let's work this out," is that the way to do it? What's the best way to do it with the IRS when you're in trouble?
Well, it depends on how big of a problem you have. If it's been years and years and years, and you have hundreds of thousands of dollars, let's say, in taxes that you owe to the IRS.
Like a Charlie Rangel situation. Yeah, okay.
Like a Charlie Rangel situation. You got all sorts of beachfront rental properties. You have no idea how to account for it. At some point, you probably do want to get a tax attorney if it's a multiple six-figure kind of situation. The next step down is there's a class of people on one of these called an enrolled agent. So you can go to the website of the National Association of Enrolled Agents. An enrolled agent is kind of like a CPA, but just for taxes. And these are people that have representation authority before the IRS. You can authorize them to speak on your behalf to the IRS. They tend to be much less expensive, for instance, than hiring a tax attorney or hiring a full CPA firm would be. So if you're in a situation where it's been a few years since you filed your taxes, you need somebody to kind of clean it up. You probably owe a little something, but it's not the end of the world. You probably want to hire an enrolled agent.
Interesting.
All right. So are there special rules this year that are different than in past years? I've heard something about health insurance.
Well, yes. This is the first year that the individual mandate under Obamacare is kicked in. And so you have to document on your tax return what type of health insurance you had all year. So if you had health insurance from work all year, or you had health insurance from a government source all year, like Medicare or Medicaid or the VA, there's actually a checkbox that they have you do right on the 1040 that says, I'm in one of these categories, I don't need to account for it. However, if you got your health insurance through one of these Obamacare exchanges, and Maryland has its own exchange, Virginia has the federal exchange that it participates in, healthcare.gov, and D.C. has its own exchange, you're going to get one of these forms called the 1095A that go month by month and tell you exactly what type of health insurance you have. That's a lot more complicated of a situation. It really has tripped up a lot of people this tax season because it's not in an intuitive form at all. But if you're one of those unlucky souls who gets your health insurance through an Obamacare exchange, you've got a lot of additional reporting to do this year. If you didn't have health insurance at any point in the course of the year, you could be liable for paying that penalty under the individual mandate.
All right, and I got another question, and that is, since the story out this morning about some of the way that the IRS has been spending the money that we send to them. Things like, $4.3 million on market research and to find out about what people think about the IRS. I mean, we probably could have just told them that, couldn't we? I mean, did they need to spend $4.3 million? Is there a lot of waste at the IRS in your mind?
Well, yeah. I mean, I'll throw another one at you. The IRS every single year lets 500,000 hours of employee time aggregately be used for union activities inside the IRS. So you've got the IRS commissioner out there saying, well, hey, we don't have enough man hours of people answering the phone and answering the 800 numbers and getting back with taxpayers. Well, I would say step one of that is tell people that work for the IRS, which means they work for the American people, they work for the taxpayer, instead of spending 500,000 hours a year doing your little union business, whatever that happens to be, why don't you sit your butt in front of the phones and answer people's calls when they call in?
Yeah, imagine that.
Yeah, what a thought.
I wonder, since you know the code, and there are very few people who actually understand and know all of the nuances of the tax code, but I'm sure with all the advice you give the good folks at Americans for Tax Reform, you have a pretty good handle on it. Are there certain deductions or credits or breaks that you're surprised more Americans don't take advantage of, that are sitting there just waiting to be used?
Well, the one that I think most people really need to find a way to do, and this is a question you have to really get your budget arranged before you can take advantage of it, is tax-advantaged retirement savings. It's probably the number one tax benefit most people have besides the mortgage interest deduction on their home.
You mean like a Roth IRA or a 401k?
Yes, and all of that stuff. You can put up to $5,500 a year into an IRA, either a traditional IRA or a Roth IRA. You can put up to $18,000 a year now into your 401k or your 403b at work or your TSP if you're a federal employee. Plus, you get a match on that, usually, from your employer. Those combined are massive, massive tax savings. The only thing that really comes close to it is your mortgage interest deduction on your home. It's the number one thing that people don't use, because if they did, everyone would be maxing them out. Everyone should be maxing them out, because after all, that money isn't going anywhere. That money is going to you. It's like you're putting it in a time machine, and it's going to show up in a much bigger form for you when you're retired.
Yeah.
All you're doing is saving for yourself.
What about the red flags? I mean, I've always heard, be careful with the home office deduction.
Well, I have not found that ever to be a problem. I do home office deduction a lot for a lot of my clients. I've done a tax prep firm, a small one in D.C. for the last 10 years.
Yeah.
And I've not found that to be a problem. I really think the source and origin of that, we all saw 1980s sitcoms that had a home office deduction audit episode. And I'm pretty sure that's actually the source of that, because I've never seen it.
That's like an urban legend. So are there really red flags? Are there things that will trigger an audit, or more likely to trigger an audit than other things, like having an LLC or something like that?
Well, something I have seen is if you are a very generous contributor to your church or other charities, and you give a lot of your income, let's say more than 10% of your adjusted gross income, to charities, the IRS is going to want to make sure you document that, because right now there isn't any backup documentation for that. That's one area. So if you're a literal tither, let's say, at your church, you're going to want to keep really, really good independent records of that.
And by the way, actually flesh that out for me, because a lot of people just throw a $20 bill or more. They just throw cash into the plate, and so there is no direct return on that. I mean, at what point do you need to actually have either a canceled check or a receipt from your church?
Well, at any point now, there is.
Really?
It used to. Yes, yeah. The rules are very, very strict now. You have to. The ideal thing is you have to have an independent record from the church itself, a letter usually, that indicates that this is what I gave. Short of that, it'd be good to have some sort of a bank record, a canceled check. I know at my parish we can give by credit card. A lot of places can do that now. So some sort of backup financial documentation that shows that money came from you to that approved charity. But ideally, you have both. You'd have a letter from the church, and you'd have some backup banking documents.
All right, Ryan Ellis, we got to leave it there. Thank you. I know you're busy today on tax day, so thanks for joining us.
I appreciate it, Ryan.